You might have wondered by now why people say the stock market was up or down today. How do they even know that? It's like there are a few numbers that move everything, just like the stock market, gold, or even the price of the dollar. But there's something really important in the middle called the market index. What is this index? Why is it so important, and how can you make money from it? I'll explain it to you in this video. What is an index? An index is a number that shows the average status of a group of stocks. For example, the S&P 500 shows the average status of 500 of the largest companies in America, or the Dow Jones reflects the status of 30 leading American companies. The movement of these indices can affect the entire global market. So instead of looking at each stock individually, by just glancing at our chosen index, we can understand the overall condition of the market, whether it's going up or down. How can we trade on indices? You should know that an index itself is just a number. It's not like a commodity or a stock that you can buy, but you can trade based on the movement of this number. By using a tool called CFD, or contract for difference. Simply put, you predict whether the index is going to go up or down. If your prediction is correct, you profit from that movement. Let me give you an example. Imagine today the S&P 500 index is at 5,000. You analyze things and think that the US market is going to get stronger and this index will go up. So you open a buy position. If the index actually goes up to, say, 5,100, you profit from that price difference. Or on the other hand, you analyze and say things are going to get worse and the index will go down. In that case, you open a sell position. If the index drops from 5,000 to 4,900, you still profit from that decrease. So when trading indices, we're betting on the market's direction, not actually buying the index itself. Now, how can we enter the index market and trade based on these numbers? First of all, you need to register with a reputable broker like ITBFX. Then you open a trading account and deposit some money into your account so you can start trading. Now you get to the step of choosing an index. Here you need to decide which index you want to trade. For example, DAX, NASDAQ, S&P 500, or any other index that interests you. The next step, which is really important, is that you need to have a clear strategy. That means you should decide in advance where you want to exit the trade, what stop loss you've set, what profit is suitable for you, and how much you're willing to risk on that trade. Once you've figured these out, you can open your position. That means you predict whether the index will go up or down, and then you enter the trade. Don't forget, if you're a beginner, start with a small volume and definitely manage your risk, because the index market is also highly volatile. Now that you understand what indices are and how you can profit from them, in the next video we're going to dive into a really exciting market, the commodities market. If you want to know how to trade gold, oil, gas, and other commodities, don't miss the next video.